So now you know what a dividend stock is versus a growth stock. You know how to calculate dividend or distribution yield. You also should know what a dividend is versus a distribution. Now it's finally time to understand and know how do we actually get paid by holding dividend stocks or ETFs that give out distribution. So it's very simple. We need to understand the concept of the X date, the record date, and of course the payment date. So we're going to stick with TD Bank as our example for this series. So if you just scroll down, I'm in the dividend section here, you'll see a term dividend X date or X dividend date, and then there's also the payment date. So as we could see here, the X dividend date of the latest dividend is July 9th, 2025, and you actually have the payment date of July 30th, 2025. So it's very easy to understand what the payment date, that's the day that you're actually getting paid, everyone. It's very, very easy, right? So if you own TD stock, you're going to get $1.05 per share, right? So if you own one share, you're getting $1.05. If you own 10 shares, you multiply that by 10, etc., etc. You're getting paid on July 30th, 2025. But to qualify to actually get the dividend payment on July 30th, 2025, you're going to have to buy the TD shares by a certain date. And that's actually by the X date. So to qualify to actually get the July 30th payment, you have to buy your shares of TD Bank one business day before the X dividend date. That's basically what the dividend date is. That's when they're basically going to remove the dividend amount from the stock price. For an ETF, it's kind of the same thing as well. Distributions, they also have X dividend date, record date, and payment date. And by the way, the record date used to be, in the past, used to be one business day after the X dividend date. So for this example, in the past, the X dividend date would be July 9th, the record date would be July 10th, the payment date would be July 30th, but they recently changed it so that the X dividend date and the record date are exactly the same date, which means you really only need to know the X dividend date because it's the same date as the record date. But in the past, you had to buy the stock to qualify for the payment date one business day before the X dividend date and 2 business days before the record date, of course, because the record date was 1 day after the X dividend date. So hopefully you're not getting confused, but let's look at a very, very easy example here. This is the Global X Enhanced S&P 500 Covered Call ETF, which gives out monthly distributions. So if we scroll down, you could actually see, unlike the TD page, that there's the X dividend date and the record date, and you see, very easy, it's the exact same date, and that's going to be going forward. They recently changed that the record date is the same exact thing as the X dividend date. So if you want to qualify, if you want to get USCL distribution, if you want to get paid on June 6, 2025, you simply have to buy USCL shares 1 day before the X dividend date, right? You could even Google if you want, buy stock 1 day before X date. Right here, if you buy a stock 1 day before the X dividend date, you will get the most recently declared dividend. So to qualify, you cannot buy the shares on May 30th. If you buy the shares of USCL on May 30th, you will not qualify for the June 6th dividend or the payment coming on June 6th. You got to buy it 1 day before. So that is basically it, everyone, when it comes to X dividend date, record date, and payment date. Again, payment date, very simple, the day you get paid. X dividend date and record date is now going forward the exact same thing. And to qualify, you need to buy the shares 1 business day before the X dividend date or the record date. So what exactly happens on June 6th? Well, this payment amount, just like in TD, you have a dividend amount or a payment amount. This is a per share amount. So if you buy, let's say 500 shares of USCL 1 day before the X dividend date, you're gonna have, what is the payment you're gonna have? $127.50, because you'd have to do 500, you have 500 shares. Remember that this payment amount is per share. So you get 25.5 cents per share So if you have 500, you multiply by 500 and you get $127.50. And this is a monthly amount. The TD one was quarterly, but it's the same concept. So very, very easy, everyone. You know now, you should know what an ex-dividend date and record date is. It's the same day to qualify for the payment date, that declaration, that monthly declaration for USCL. You have to buy the shares 1 business day before May 30th. So whenever, if an ETF gives out a monthly distribution, you'll typically see an announcement every month. And if a stock or dividend stock does quarterly, and they typically are quarterly, they will do an announcement every quarter. And in that announcement, you'll see they will mention what the ex-dividend date and what the payment date and typically what the amount is as well. So now you should understand exactly what's happening, right? If you have 500, you buy 500 shares of USCL 1 day before the recent distribution, 1 day before the ex-dividend date, you'll get that amount, which was $127.50. And that amount will hit your account wherever you hold the ETF or stock as cash, or if you have the drip on, which is probably going to be another episode, it's going to take that cash and automatically, your broker is automatically going to buy you $127.50, for example, more USCL shares. Another thing to remember, this is a very important thing, is that especially for these high yield ETFs like USCL, you'll see it's even more pronounced. The day of X date, so on May 30th, you will wake up and you'll see the stock price of USCL drop by the dividend rate amount, right? Because what they're doing on the ex-dividend date is they're taking 25.5 cents out of the stock price, if you will, the correct term is out of the net asset value of the fund, to give that to the shareholders on June 6th. So if you look on USCL stock chart on May 30th, you'll actually see that there's actually a drop from the 29th to the 30th. So basically on the 29th, USCL will be on one price, but because May 30th is the ex-dividend date, on May 30th, when you wake up, the stock price, or the net asset value rather, of USCL, which is very tied to the stock price, is going to drop by the dividend amount by 25.5 cents. So if it's, ETFs have a very, very high yield, they're giving out a lot of income, you'll actually see that. It's a question I get all the time still. Why did USCL or whatever stock price drop when I woke up? Well, it dropped because it's ex-dividend date. And on ex-dividend date, they're removing the 25.5 cent from the net asset value. So you'll see that reduced from the stock price. And that is withheld to give out to the shareholders on June 6th. So that is how we get paid, everyone, when you own a dividend stock or an ETF that gives out a distribution. So now you should know how to calculate it. You should know everything there is to do related to dividends, distributions, the yield, and how you get paid. Remember, it's per share. This is the payment amount here is per share. So if you own more shares, of course, you're going to get a bigger dollar amount. So that wraps up the episodes, I believe, for dividends, dividend stocks, everything you need to know about dividend stocks, distributions, etc., etc. Give me a thumbs up. I'd really appreciate it. Don't forget to send this video to friends or family. We're just starting with investing, and there's many more investing topics to come. So stay tuned and see you next time.